The ability to defer or eliminate capital gains in the sale of your company is unique to ESOPs. It is a benefit that not many people are aware of, but one that can generate an increase in after-tax proceeds of 20 to 30% or more, depending on in which state you reside. I'm Will Stewart with PCE Investment Bankers. Welcome to ESOP University. Today, we will dive into some specifics on the 1042 tax deferral. To qualify for the 1042 tax deferral, named after the section of the Internal Revenue Code which codified it, the sellers and/or the company must meet specific requirements to qualify. Some of the requirements are relatively straightforward, while others are more complex and require significant analysis. The key requirements are: the company must be a C corporation at the time of the sale to an ESOP. The company does not have to be a C corporation today. Often a company is not a C corporation when it decides to sell some or all of its stock to an ESOP, but can usually become one relatively easily through reorganization. Secondly, the ESOP must own 30% of the stock in the company after the sale. Additionally, the selling shareholder must have held the stock for a minimum of 3 years prior to the sale to the ESOP. The selling shareholder must also reinvest their proceeds from the sale in qualified replacement property, or QRP, and they must make this reinvestment within a 15-month reinvestment window. Technically, it's a 15-month reinvestment window, but practically it's more like a 12-month reinvestment window because the 15-month time frame covers 3 months before the sale and 12 months after the sale to the ESOP. The overwhelming majority of our clients who take advantage of this tax deferral do so post-sale. QRP is defined as securities issued by an unrelated taxable U.S.-based operating entity. So no treasuries or municipal bonds, no holding companies or real estate, but the options are still numerous, and there are some very sophisticated strategies which allow you to make this capital gains deferral permanent. Based on this information, you might think that the deferral strategy would be an automatic decision for a business owner selling to an ESOP. However, there are advantages to being or staying an S corporation. Analysis must be done to determine the best path forward for the sellers and the company. This is often done in the form of an ESOP feasibility study. Follow the link in the video description to learn more about ESOP feasibility studies and what they contain. Thank you for joining me on this episode of ESOP University. We appreciate your interest in ESOPs. If you have additional questions, please reach out to us anytime. And if you like this video, subscribe to our channel so you'll be notified whenever new content is posted.